Delaying the inevitable is an issue, there's no doubt. What really could be done instead is what they'll ask. How can this be resolved? How much debt can be added on top of a debt problem to fix it? Can the Fed save us again? Rent and mortgages are being delayed to save those who can't afford it. Landlords might be taken out if they're not getting any breathing room on their end. The lenders aren't getting their revenue. The domino effect is in full force. Something has to break. The question is, what will it be? You came here for the truth, so let me unveil that for you. Today we're going to talk about the crisis of unpaid rent. I want to show you several statistics that go in line with that. I've got some information talking about what's been happening recently on all levels. I also want to show you an indicator that I believe is really important. Stay tuned. It's a jam-packed one, but I want to move quick. Let's go. Okay, let's start with this. New York City renters owe more than $1 billion in unpaid rent survey fines. State was earmarked for $1.3 billion in rental assistance in last month's federal relief package. We're going to see what happens, but ultimately you have a situation because there are a few levels here. Either we're looking at, the rent or mortgage. In this case, you have to understand that you go beyond that, looking at the landlord, and then we go to the lender or the bank or the financial institution, whatever it might be. And any one of these layers could actually snap. It could break. You have a problem in between these, and that starts a chain reaction. That's a domino effect. It doesn't matter which level you've got a problem at. Of course, look at what occurred during the housing crisis. You had people who weren't paying the bills, and that exposed the underlying rot of the financial system. Everybody at that time, 99.9% of those in the financial industry, and of course all of those who were speculating at that time, said it's not a problem, you don't have to worry. Okay, it's just a small select group in the subprime mortgages. The financial system is safe, secure, it is not over leveraged, though we see a little bits and pieces here and there, but it's all contained, you don't have to worry. And you can read the quote after quote after quote, and you could see the individuals from Bernanke all the way down. Everybody said everything was fine, but then the stink, the rot started to creep up, and you see it time and time again. They always say it, and then you learn that we have no reason to believe what they say. And here we are in the middle of it right now. There are so many things that are starting to stink, and if you just take a whiff, you will smell what I do. There's more information if you go down further in this Wall Street Journal article. Looking at this, tallying responses from landlords, the group estimated that as many as 185,000 households living in the apartments are more than 2 months behind on rent, with an average debt of more than $6,000. That's the figure coming back again. I've shown you this previously. He also said here a total debt right here, total debt New York City renters carrying more likely $2 billion. $2 billion. But as they say in the bottom paragraph, not a big deal if they get bailed out. This is the problem here. Everybody can't be bailed out. Every institution can't be bailed out. Likely what happens is they give the people the crumbs, and then they continue to bail out Apple because, they're the biggest company in the world and they need to be bailed out for some reason. But anyway, this is what happens when you look at their actual activities. But if you don't start digging through, you don't get it. If you're just looking at the mainstream, we're never going to learn that. That's why I try to bring you pieces from everywhere, and then we connect the dots together. It requires daily activity. That's just the way it is. You can't learn it all in 5-minute segments, but here we go, you and I looking through all the weeds to get to the details. The new stimulus plan is expected to be massive, $1.9 trillion. We'll see what actually goes through in that package, you'll likely see what they'll try to get through anyway is $1,400 check. So that's in addition to the $600. So together you're getting that $2,000. That's of course only going to help people out slightly. I don't know exactly what the plan is here to fix the underlying problems, but this is what they're trying to do, at least at the beginning. So we can expect that perhaps within the next several weeks, we'll see. The eviction moratorium, that's continuing on, okay? So you're looking at the legislation including $25 billion for rental assistance, $5 billion for overdue water and energy bills, and an extension of the nationwide eviction moratorium set to expire at the end of January. They're going to push that forward to September. So this is something that we'll have to see, but ultimately, the state is taking on all the debt when they're already to have too much debt as it is. So I don't know what they're going to do to fix their problems. They can't grow out of it. We know that already. I saw David Rosenberg quoted saying basically, look, they are saying that there's so much pent up demand out there, and as soon as everything is back to normal again, that everything's just going to roar back in the economy because of all the pent up demand. But he said this doesn't necessarily apply to services, because if you think about it, if somebody goes for their monthly haircut, they haven't been doing that. Are they then going to get haircuts twice? Let's just say once a week or every other week to kind of make up for the lost haircuts that they didn't get for the last year? Of course not. No, there's basically a huge gap that can't be filled in. That's the point. So we have to understand that when all of this starts to settle, we're going to see the damage that has been done. Anyway, state and local aid is in there. Stimulus checks are in there. Unemployment insurance. And of course, the bailout, I'll say it, the bailout of Big Pharma. So there's a lot coming. We'll see what actually happens. Right now, it's all up in the air. Jobless claims surged to the highest weekly total since August. This ticked up. You can look at it week to week. To me, all I want to acknowledge is the fact that it's still very, very high. And this is using their fake numbers. So we know specifically that it is much worse, but even going by what they have here, it is significant. Going near 1 million in this case. We'll see if it continues to tick up. We do know that with all the closures and things that have happened, this is certainly something that could get worse. But you don't have to worry because the stock market is doing just fine. And that brings me to this. Reinhardt frets world faces financial crisis if this continues on. Something that I have mentioned over and over and over again, where you see a lot of the analysts and the speculators, they're looking at certain things head on with the blinders on, not reading between the lines. But she makes a good point, and something that I've talked about many times, I wanted to cover it here really quickly. World Bank Chief Economist Carmen Reinhart is worried that the protracted nature of what we're dealing with right now may overwhelm household and business balance sheets and develop into a financial crisis. No way could it possibly be, even though they tell you that there's a recovery. She actually points that out in here. It's a cumulative toll. This did not start as a financial problem. This started and continues to be, first and foremost, a health crisis, but it has elements that have morphed into your classic balance sheet problems. So this is somebody obviously that knows what's going on, got the finger on the pulse, but we can't necessarily take any of their solutions. The World Bank, the IMF, generally solutions, very bad. Then she said, the longer this goes on, the more disruptions in terms of jobs, in terms of closures of business. I am very concerned that the longer this goes on, the more strain on balance sheets of individuals, households, of firms, of countries. And of course, it has been stretching on for a year now. This is putting some serious damage on all levels, every single level. Certain areas doing better than others, of course, but all in all, we are adding to the debt, and that is unsustainable. We know that. We've seen the historical pattern and the destruction that this brings. But what the solution that they are bringing to everybody is that we can monetize the debt, and that wipes it away. And we know what happens in those cases every single time. And now for some information nobody seems to care about. Federal spending sets record through December. We are looking at a record 1.376 trillion. It is unbelievable. Look at the chart. It's just going crazy. The amount of money that they're spending, we haven't seen a spike like this since, of course, the financial crisis. So it just shows you that whenever there is a crisis, they'll continue that spending and the trend will ultimately continue on that trajectory forevermore. If you found the video informative, hit that thumbs up button. If you hated this video, make sure to hit the thumbs down. Okay, I love those thumbs down as well. If you want to learn about e-commerce, you can go online. There's tons of courses out there, charge you about $1,000 for a decent one. There's also some that go $2,000 and above that, or you can learn for free, whichever one you choose, the AmazonGPS.com. If you want to understand the financial system, you want the no BS version of it, my 2 books are exactly that. You can get them at the link in the description. And if you haven't seen this video yet, you definitely want to check it out. Click it. I'll see you there.